They tell you trading is about numbers, about charts, about finding the perfect entry, the perfect exit. They sell you indicators and secret formulas, but they leave out the most important part of the equation, you. They never tell you that the market is a mirror. It reflects the collective fear and greed of millions. And right in the middle of it all, it reflects you. 95% of traders fail, not because their strategy was wrong, but because they never understood the real battlefield. The real battle is not on the screen. It's behind your eyes. Today, we're exposing the mind traps that keep you losing, and we're giving you the keys to break free. First, meet the FOMO trader. He sees a stock going vertical, a rocket to the moon. His discipline feels like a mistake. A voice screams, "You're being left behind." This is FOMO, the primal fear of being left out. So he jumps in at the top, buying into the hype just as the early money is cashing out. For a moment, he feels a rush. Then the rocket runs out of fuel. He sells at a catastrophic loss, a victim of his own instincts. The fix? Rules, not willpower. Create a trading plan with one ironclad rule. I will never chase a stock that has already run X%. Define your X. Stick to it. You are a sniper, not a spectator chasing a parade. Next, the greedy trader. She's in a perfect trade. Her profit target of $1,000 hits. Her plan says, sell. But a whisper says, what if it goes to $1,500? She holds. The trade ticks up to $1,100 and then reverses. Suddenly, her $1,000 target seems like a dream. The position goes from green to red, all because she wanted more. The cure for greed is automation. Use take-profit orders. Let the machine execute your plan. When your target is hit, the trade is over. You won. Celebrate the discipline, not the extra ticks you might have missed. Then there's the fearful trader. His setup is perfect. It checks every box, but he does nothing. He's frozen. Why? His last two trades were losers. The ghost of yesterday's losses is haunting today's opportunities. This is loss aversion, where the pain of losing feels twice as powerful as the pleasure of winning. He watches in agony as the trade he was too scared to take plays out perfectly. The tool to overcome this is to think like a casino. No single trade matters. Your job is to execute your edge over hundreds of trades. Risk only 1% of your account on any single trade. When the potential loss is small and manageable, it's psychologically easier to pull the trigger. What happens after a big loss? You might become the revenge trader. The loss feels like a personal insult. Your ego is wounded. Logic is gone, replaced by a burning need to get your money back right now. You double your size, you trade wildly, you punch at a market that doesn't know you exist. This is the fastest way to blow up your account. The cure is a mandatory cooling off period. After a big loss, walk away. Close the charts. Your rule is simple. After a big loss, I stop trading for the day. The market will be there tomorrow. Your capital won't be if you fight it today. Now imagine the overconfident trader. She's on a winning streak. She feels invincible, confusing luck with skill. This is the hot hand fallacy. She thinks, I can't lose, so she dramatically increases her risk. One bad trade and the fall is brutal. A single overleveraged loss wipes out all her previous wins and shatters her ego. The antidote is humility. Always follow your risk management plan. Always assume you could be wrong. Your trading journal is your best friend here. It grounds you in the reality of probabilities, not the fantasy of invincibility. Then there's the bias trader. He's decided a stock will go up. He loves the company, so he seeks out information that confirms his belief and ignores anything that contradicts it. This is confirmation bias. He isn't analyzing the market, he's fitting the market to his opinion. He's completely blindsided when the trade fails. To defeat this, you must become your own devil's advocate. Before entering a trade, force yourself to make the strongest possible case for the opposite side. Pressure test your idea to find the flaws before the market does. Let's look at the addicted trader. He's scalping in and out dozens of times a day. Each trade is a small hit of dopamine. He's not trading a plan, he's chasing a chemical rush. The action itself has become the drug. This leads to overtrading, huge commission costs, and mental exhaustion. The solution? Slow down. Force yourself to trade on higher time frames. Move from the 1-minute chart to the hourly chart. Set a hard limit on the number of trades you can take per day. Make each trade a deliberate decision, not a compulsive click. Finally, we have the burnt-out trader. She's grinding 12 hours a day, believing more screen time equals more profit. But she's foggy, making simple mistakes. Her mental capital is gone. In trading, relentless hustle is the enemy of profitability. You can't make sharp decisions when you're running on empty. The cure is scheduled disconnection. Treat rest as a vital part of your strategy. Take days off. Have hobbies outside of trading. A focused 2 hours of trading is infinitely better than a frazzled 10. Protect your mental energy as fiercely as you protect your capital. So, where does this leave us? It leads us to the evolved trader. She has felt all of these things, but she learned the problem wasn't her charts, it was her impulses. She built a fortress. Her walls are her trading plan and her behavioral rules. Her intelligence report is her journal, where she logs her emotions, not just her trades. She has mastered delayed gratification, focusing on a disciplined process, not a lottery ticket. The ghosts of fear and greed still whisper, but they no longer control her. She is the operator of her mind, not its victim. The journey to profitable trading isn't about finding a secret indicator. It's an inward journey to master yourself. If you've ever made a trade based on emotion, if any of these stories felt familiar, hit that like button. And if you are ready to stop fighting the market and start mastering your mind, subscribe. We go deep into trading psychology every week to help you build your own mental fortress. The journey is long, but you don't have to walk it alone.